Welcome to Earnings Central. In this video, we'll break down FiscalNote's fourth quarter fiscal 2024 earnings. We'll cover key financial performance metrics and dig into insights from the earnings call. All right, let's go. Starting with top-line revenue, the original estimate for Q4 was $29.0 million. The company actually reported revenue of $29.5 million, surpassing expectations by 1.7%. However, this quarterly revenue marked a 14% decrease compared to the $34.3 million reported in the same quarter last year. Moving to adjusted earnings per share, the original estimate for Q4 was a loss of 8 cents. The company actually reported a loss of 10 cents per share, falling short of expectations by 2 cents per share. However, this result reflects a 29-cent per share improvement compared to the loss of 39 cents per share reported in the same quarter last year. Now let's dive into some additional performance metrics highlighted during the earnings call. The headline number is their adjusted EBITDA of $9.8 million for 2024. This represents a year-over-year improvement of more than $17 million and a 1,400 basis point expansion in margins. This is the first full year of positive adjusted EBITDA in the company's history, marking a significant milestone in their transformation journey. Another impressive achievement is how FiscalNote has reduced their senior debt by 60% in the past year. Through strategic divestitures and disciplined capital allocation, they've paid down a substantial portion of their debt, which in turn has decreased their cash interest payments. They're expecting to close the sale of Oxford Analytica and Dragonfly by the end of March, which will further reduce debt by about $30 million. Looking at their revenue composition, subscriptions accounted for 92% of total revenue in Q4, consistent with their historical trends. This high percentage of recurring revenue provides stability and predictability to their business model, which investors typically value. In terms of customer relationships, their annual recurring revenue, ARR, stood at $107 million at the end of Q4 compared to $109 million in 2023 on a pro forma basis after adjusting for divestitures. While this represents a slight decline, management is projecting a return to ARR growth in the second half of 2025. Their net revenue retention was 98% in Q4 compared to 99% in the prior year. This metric measures how well they're retaining and expanding customer relationships, and while slightly down, it remains relatively strong. Management is focused on improving this through their product innovation initiatives. The company also showed remarkable improvement in cash management, with a $30 million improvement in operating cash flow for 2024 compared to 2023. Cash flow from operations was negative $5.3 million for the year, but this substantial improvement points to a clear path toward positive operating cash flow in the future. Now, let's shift focus to some of the key insights and takeaways from the earnings call. Perhaps the most significant development is the launch of PolicyNote in January 2025. This new AI-first platform consolidates all of FiscalNote's policy-related data and content into a single user interface. This is a foundational move for product-led sales and growth, and early indicators suggest strong engagement and promising adoption trends. CEO Josh Resnick outlined the company's focus on 3 transformation pillars: expanding adjusted EBITDA margins, managing debt to accelerate positive free cash flow, and building a foundation for sustainable, profitable growth. These pillars form the backbone of their strategic vision moving forward. The company is seeing particularly encouraging signs with high customer engagement with AI features within their new PolicyNote platform. Users are actively leveraging advanced AI capabilities like AI assistant and alerting functions, which help them discover policy changes they might otherwise miss, a key value proposition for FiscalNote's target customers. Another positive indicator is that multi-year commitments have nearly doubled in the corporate sector during Q1 2025 compared to a year ago. This demonstrates market confidence in their offerings and product roadmap and signals anticipated improvements in gross retention, positioning them for stronger top-line revenue growth in 2026 and beyond. Looking ahead, FiscalNote is targeting ARR growth in the second half of 2025, which they expect will translate into GAAP revenue growth in 2026. While they acknowledge near-term market volatility in both private and public sectors, they remain confident in their long-term growth trajectory. Finally, the company is driving efficiencies through product consolidation on the PolicyNote platform, which will allow them to deprecate multiple legacy platforms. This consolidation is expected to reduce capital expenditures and increase operational efficiencies, further accelerating their path to positive free cash flow. For 2025, FiscalNote is guiding to total revenues in the range of $94 million to $100 million and adjusted EBITDA of $10 million to $12 million. This represents more than double their 2024 adjusted EBITDA margins on a pro forma basis, reflecting their commitment to profitability. That wraps up our recap of FiscalNote's fourth quarter fiscal 2024 earnings. If you found this recap helpful and want to stay on top of more earnings reports from other companies, don't forget to subscribe. We've got plenty more quick and easy breakdowns coming your way from Earnings Central.